showing you here the markets. They're down 1%, 2%, 3%, but still very high on the weekly time frame. Just doing a quick. We are still very high, and this is not a good time to buy. So I just want to do a little video here. This is going to be very tempting for a newer investor to start a position, but I want you to realize that this is also the most dangerous. When the market goes up and then starts to decline a little bit, it feels like a dip, but you have to ask yourself what could go wrong. If you're wrong, your risk is all the downside. So the market has been going up since 2009, which is over a decade. Since 2009, 2008, the market has been going up. The Nasdaq was at 1,000 in 2009. It hit 12,000. So the market has as much as 50% that it could decline. If you're a new investor, do not put on large positions. Do not put on that small down payment for a house into the stock market. Do not put your life savings heavily invested in stock right now. This is not a good time to put all your money in. This is a very dangerous time. We're still in a recession. We're not officially out of the recession. So this is just a heads up, because I know a lot of people who are like, oh, the stock market's really good. The stock market's going up. I could grow my down payment. I want to buy a house. There's a lot of emotions that are involved right now, but I've seen this before, not because I'm smart or special or anything. It's just I've been alive and I've been paying attention for the markets since I got out of college, and I learned a lot of lessons. And I remember a lot of supposedly smart people who made a lot of mistakes, and a lot of old people who still don't know how the market works. You have to be very careful. The markets go two ways, and they always go in the way that hurts the most people, and it does it really fast. There's going to be a sharp decline. It's happened already 4 times in the last 2.5 years, and we're in one of them right now. This one could be worse. I don't know, but I feel like the rally was not on sound fundamentals, and we're getting the consequences right now. And the way price discovery works, we don't know, and that's what we're trying to discover with the sell-off. I'm not going to show you charts because they don't matter right now. The only thing is, this is more of a quick lesson. The first dip in a decline is the most dangerous, and it will trap the most people. The first dip, the last recession, my own father, I saw him fall for it. There's a good quote that I heard recently: if the water is murky, all you have to do is wait and you'll get better information. So if you're not sure about something, do yourself a favor and wait. The other lesson or quote here is, the first mouse doesn't get the cheese. So it's the second mouse that gets the cheese. And think about that in this way. There's a mouse trap, and we don't know if this market is a mouse trap, but the dip is the trap. And there's cheese, and we all want the cheese. We all want the profits. We all want to make money. We all want to grow our savings. We have goals. We're trying to live life. We want to have wealth. We want to be able to spend it on something important, take care of our loved ones. So the bait is the cheese. Now, if you're the first mouse, you're too early, and you bite the cheese and snap, you're dead. You get hurt. But the second mouse, now that the trap has been triggered, can run up and grab the cheese because you waited. So there's nothing wrong with waiting and being late. If the market takes off, it goes up 1,000%. The market's going to go up 1,000%. The market in a bull market will move 10 times, go up 1,000%, 500%, 500 to 1,000%. The best winners go over 1,000%. The market is only down, like the Russell's down 3%. The S&P's down 2%. Apple's, it's come down quite a bit from the highs, but that thing's gone up over, I want to say 1,000%. It can go down over 50%. In a real bear market, it'll go down 80%. And people will buy it eventually and will still make a fortune. Don't rush into the market just because you see a little bit of a discount. If you're a newer investor, uh, what I would tell you is just wait. If you want to buy one share, fine, buy one share. You want to buy $100 worth, fine, buy $100 worth. Do not put on a whole position. Spread it out over time. If we're in a true recession, it can be 6 months, it can be 2 years. And that's a normal recession. If it's something worse and we don't know, it could be different. Plan on trying to survive. If this is a recession, let your money survive 6 months to 2 years, and that will uh, that will help you out. If the market drops over 30% like it did before, maybe that's a better buy. But right now in the first dip, just be very careful. That's my message for the day.